Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your Midday Market Minute. If you got our Morning Express today, you'll see that we do have the NASDAQ levels on there under the S&P. We have done that by popular demand, and it will be there going forward. Give us a call with any questions as to that. Now, you're looking at the equity markets. They're consolidating a bit today. They've had a bit of a whipsaw with comments coming from the White House. However, first key resistance has held, and that's important. We have a major three-star level out above there, so watch that. And if you start to rally and you get through those levels, that should bring the market back near last week's highs. Now, we don't necessarily see that happening. We'll look to the downside. First key support is held on both the S&P and the NASDAQ. If we get below those levels, we'll start to see accelerated selling. Now, we've given the rhetoric that we do think this market should be testing higher. However, you have to look out to next week, and we don't necessarily have a catalyst right now. Earnings have been fairly good. Look at Comcast, Procter & Gamble, some of the airlines. They're all holding the market up after that, and the banks have held their gains from last week. But next week, there is that optimism we're seeing from the White House on U.S. and China trade, as well as the Fed meeting, with the Fed being less hawkish, and then non-farm payroll. You saw that big report last month. However, it's unlikely to see average hourly earnings increase again at that pace. All of this has helped prop the market up. So you may not get that catalyst in either direction, and especially maybe not to the downside until we get something next week. Now, moving on to crude oil, you're seeing higher price action. It's stuck its head out above 53 bucks. We have two waves of first key resistance and second key resistance out there. It's testing into right now. Don't want to see it close out above there. We have been bearish, as we don't think the inventories are going to be drawing down. In fact, today's inventory report did support our bearish thesis. However, the market's not following through to the downside. First key support on a technical basis has been very strong. However, also you've seen a drawdown in Cushing, which has been supportive to the market, coupled with news that Canada is going to cut their production. You've seen the market respond, and that's how we have it out above 53 bucks. But be cautious. If it doesn't close very constructive on a technical basis, we will very quickly be back to $52. Now look at gold and the treasuries. The treasuries are trading higher today as equity market volatility continues, and from comments coming out of the ECB. The flash PMIs this morning have also supported treasury prices broadly across the globe. Ultimately, though, you're also seeing gold trade lower as a safe haven. Now, that's with the dollar strength. You're seeing the dollar come in as safe haven bid, also on euro weakness. But gold, we've talked about, we've actually decreased our first key support and brought it down to a lower level. The previous first key support is now only a minor level, but we're prepared to see gold trade lower, especially with the dollar doing what it is. But what you want to be prepared for is coming down into major three-star support at 1260 to 1265. We may not get there, but you got to be prepared to see that. That's where you want to back the truck up. Now, as well, you have that slew of news next week that's going to move the markets, and the treasuries are trading up right now into that. We think the treasuries did come off of a big key support level, and they are responding, but you may not be out of the woods yet, as you have a lot of supply coming out next week to couple with all of that news. So ultimately, though, our longer-term rhetoric on both the treasuries and gold has not changed. Dips are buying opportunities. We're here to help with anything on the board. Please give us a call, 312-278-0500. You can email us at info@bluelinefutures.com. You can check our website for updates, and you can sign up for a free trial of our research there. But remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.